So, Fulton Financial just dropped their Q3 numbers, and on the surface, they look great. A solid beat, actually. But the stock price? It barely budged. So, what gives? That's the puzzle we're going to dig into right now.
Right, so this is the big question, isn't it? A company beats earnings, but the stock doesn't pop. Why? Well, as it usually goes, the devil's in the details. We've got to look way past those shiny headline numbers to figure this one out.
Okay, so let's kick things off with the headlines. And honestly, they look really good. We're talking about a clean beat. So check this out. We're looking at a clear beat on earnings per share. Analysts were expecting somewhere around 48 cents. Fulton came in hot at 53 cents. I mean, that's not just a little beat, it's a solid one. And it's a great sign that things are running smoothly. And it wasn't just the bottom line either. The top line, the revenue, also came in strong, hitting over 334 million bucks. That's a jump of more than 5% from this time last year. So yeah, top and bottom lines looking pretty good.
All right, so the headline numbers are good, but that clearly wasn't enough for the market. So we've got to go deeper. Let's pop the hood and see what's really going on inside the financials.
Okay, now this is where the story gets really interesting. Their net interest income, that's the core profit a bank makes from lending, it jumped by a really healthy 9.3 million quarter over quarter. And get this, their net interest margin actually went up by 10 basis points. That just means they're squeezing more profit out of every loan they make. And they managed all this while bulking up their capital. Their CET1 ratio, which is a key safety metric, is now sitting at a very strong 11.5%. And that's not all. Management put their money where their mouth is. They went out and bought back almost $31 million of their own stock. That's a classic signal from a company that they think their shares are a bargain. So you've got strong financials, you've got buybacks. It's no surprise that management was sounding pretty confident. Let's hear what their story was. The CEO, Kurt Myers, he came out and basically said, look, our strategy is working. He kept pointing to their strong profitability and how having a diversified balance sheet is really paying off. And the story they were telling was super consistent. It all boiled down to these key points: record operating profit, that resilient net interest margin we just talked about, keeping a tight lid on expenses, those active share buybacks, and a credit outlook they called cautious but stable. But, and this is a big but, here's the catch. For all the good news, management gave zero specific guidance for the next quarter. And in the banking world right now, with everyone on edge about interest rates, that kind of silence, well, it doesn't exactly scream confidence, does it? So that's the setup. A really strong quarter, but a very cautious, kind of vague outlook. So how did the market react? Well, the stock price tells you everything you need to know. It moved up just over 0.5%. That's nothing. For an earnings beat, that's basically a flat line. It's not a disaster, but it's definitely not the party you would expect. But here's what's really wild to me. The price barely moved, right? But the trading volume went through the roof. We're talking 2.4 times the daily average. This wasn't people ignoring the stock. This was a massive debate happening in real time. Buyers and sellers were battling it out, trying to figure out what this all means. And you have to put this in context, too. Over the last year, Fulton's actually been lagging behind its regional bank peers. You look at the KRE, that big regional bank ETF, it's up a couple of percent. Fulton, it's down a couple of percent. So it was already coming into this report from a weaker position. So there it is. That's the disconnect. Management is shouting from the rooftops about record profits, and the market just shrugged. A tiny price move, but a huge spike in volume. That tells me the market heard the good news, but it's really skeptical about what's coming next. Okay, so let's tie all this together. It's time for our take, the next call on Fulton. We're going to break this down into 3 simple parts: our Q4 outlook, what we think the stock's going to do, and our final rating. All right, first up, the outlook for Q4. The big elephant in the room is the Fed. If we see rate cuts, and that's what everyone's talking about, it's going to put some pressure on their net interest margin. That's a real headwind they'll have to navigate. Second, what's the stock going to do? Look, without any strong guidance from the company to set it apart, we think Fulton stock is just going to be a follower. It's going to move with the rest of the regional banking sector. Its fate is going to be tied to the KRE. So that all leads us to our final rating, market perform. Look, Fulton is running the bank well. The numbers prove it. But you've got these macro headwinds with interest rates, and you've got that frustrating lack of guidance. Put those together, and we just can't get more bullish. The operations are solid, but the story for the stock feels incomplete. We think it'll perform right in line with the market, not beat it.
This is not financial advice.